Are you worried about losing all of your money in the stock market? Well, in this video, I'm going to cover the 13 most popular questions people ask before getting started in the stock market, and how not to lose all of your money. By the time you finish watching this video, you should be ready to invest your first dollar in the market. Hey, it's Josh Faulkner, and I'm your financial connoisseur, here to guide you on your way to financial freedom and teaching you how to become a better investor. If you're new here, make sure you click that subscribe button, and if you end up for some reason enjoying the video, don't forget to smash that thumbs up button, as it helps more people get the opportunity to learn from this video. So, let's jump into it. Question 1. What is a stock? Let's start with the basics. What actually is a stock? In simple terms, a stock is an investment that means that you own a share in a company that issued the stock. Stocks are how your everyday guy gets to invest in some of the world's most successful companies. Let's say you wanted to buy one share in Apple stock. That would make you a part owner of Apple. That's pretty cool, right? The more shares you buy, the bigger your stake in the company is. You can choose to purchase more shares of Apple or buy shares in other companies. Question 2. What is the stock market? Next on the list is, what is the stock market? I think this one really speaks for itself, so I'm just going to explain it briefly, so we can move on to the good stuff. As with any market, this is where you can buy or sell any shares that you own. It is known as the stock exchange. It could be best described as an auction, where investors have the ability to buy and sell shares of stocks. Question 3. How do I buy a stock? So I bet you're actually wondering now, how do I actually buy a stock? Well, the easiest way to do this is to set up a brokerage account. Think of it like your little virtual assistant going off into the market to make all your stock trades on your behalf. Apps like Webull or M1 Finance are really good examples of these that you could just easily download on your phone. A great thing about a little assistant is that apps like these sometimes provide you with free shares of stocks just for depositing money for the first time into your account. Check out the links in the description about their current promotions that they have going on. So once you've downloaded the app, just drop some money in from your bank account, and once those funds have cleared, you can start putting your little virtual assistant to work and place trades in to buy shares of your first stock. It really is as easy as that. Question 4. What are the main ways to make money in the stock market? Now we are just getting into the juicy stuff. Let's discuss how you can actually make money from the stock market. So there are two main ways to make money in the stock market. The first way is by buying low and selling high. With this strategy, it is all about being patient and being a long-term investor. I'm talking at least 5 to 10 years. Your goal is to purchase a stock at a very low price and then sell it later for more than you bought it for. As an example, if you had invested $1,000 in Amazon shares back in 2009, by 2019 they were worth $13,000. That's the time that you can sell the shares and more than double your original investment. Obviously, this is assuming that the company you invest in does well. There's always a risk of losing money if you don't choose the right companies to invest in. Think of it like a bully stealing your lunch money, but the bully in this case is your bad investment. The second way to make money in the market is by making dividend income. It sounds complicated, but in fact, it just means that if you buy shares in a company that's doing well, every quarter they will pay you money based on the earnings of the company. So I guess you could say it's like a bonus paycheck. These payments are made on a per share basis. Which means if a company pays a dividend of 20 cents per share and you owned 100 shares, you would receive $20 in cash or stock. So by investing in stocks that pay dividends, it would mean that every quarter you would earn additional money. So by investing in stocks that pay dividends, it would mean that every quarter you would earn additional money. The more shares you own, the more dividend income you will receive. Question 5. What are the main reasons to invest in stocks? So one of the most important questions people ask when getting started in the stock market is why you should even invest in stocks in the first place. I'm going to share with you my 3 main reasons I think that everyone should invest in stocks. The first reason is that you can literally get started with just a few bucks. I'm talking about $50. You don't have to be a millionaire. You don't even need a ton of savings. And you don't even need $1,000. The fact that you don't need a ton of money to get started makes it easy to start investing in stocks ASAP. What else would you do with the extra change lying around the house? Chances are you might spend it on an unneeded cup of Starbucks coffee. That's great, but once you finish your cup, the money's gone. If you buy a stock, your money has the chance to grow, so you can buy more coffee. It's a no-brainer. The next reason you should invest is the opportunity to make a boatload of money. I think it's a better investment than real estate, because real estate takes a lot more money to get started with, and there is a lot more work involved with managing your properties. The amount of money that you can make in the stock market really is unlimited. My final reason that you should invest is the amount of public information that you have about the companies that you choose to invest in. You need to be able to keep an eye on what's going on with your money. So if you want to find out how your shares are doing with Amazon stock, all you have to do is Google Amazon Investor Relations and listen to a few of the company's conference calls to learn what is going on inside the company. You can hear all about how much money the company is making, their future plans, and learn about any potential concerns that you might have about the company. With all of these resources at your disposal, it can really make you feel like you're a part of the company. Question 6. Why pick individual stocks versus index funds? The next question I want to discuss is whether you should invest in individual stocks or just put your money in something like an index fund. Let me first share my thoughts on the pros and cons of investing in individual stocks. With individual stocks, there is an opportunity for higher gains over time. If you invest in stocks over a 5 to 10 year period, stocks have the chance of making 100% plus gains. But there is also a little bit more risk with picking stocks. Think of it like playing poker. You're playing the game and you're experienced. Obviously, it's always a gamble, but the more you know about the game, the more likely you are to win. If you do enough research and you know what you're doing, then picking individual stocks have more potential to hit the royal flush. Now, let's talk about investing in an index fund. An index fund is basically a mutual fund or exchange traded fund, ETF, with a portfolio constructed to match or track the components of a financial market index, such as the Standards & Poor's 500 index, which is S&P 500. This makes it much safer than an individual stock. You're basically following the performance of the market, or an index. If you're playing the same poker game and you don't know what you're doing, then the safest thing to do is to follow what everyone else is doing. This is why index funds were created. They will give you consistent gains over time and your profits will compound year after year. There is no need for you to research individual stocks because these index funds are automatically managed for you. Just continue to invest your money over time and just sit back and watch it grow. If you're still watching, I just want to congratulate you on making it this far. It shows that you're serious about getting started in the stock market. Question 7. What to look for when picking a stock? So, now is the time to learn what it takes to become a great investor. Knowing how to pick the right companies to invest in is the reason that Warren Buffett is one of the richest people in the world and one of the greatest investors of all time. Now, you guys need to be a bit clever, a bit like a private eye. You need to find everything you can about a company before you decide to invest in their company. The best way to start your research is to visit a company's investor relations page. On there, you should study their 10K form. This is a form that shows you if that company is doing well with their money. There is also a 10Q form that shows all the money that goes in and out of the company, a bit like a bank statement. These forms have to be filled out by the company regularly. It is important to understand the details on these two forms, which I might do a video on in the future that covers these forms. So make sure you hit the notification bell to be notified when these videos are uploaded. It is also important that you can keep up to date on what's going on with the company by listening to their latest earnings calls. We all love listening in on someone else's phone call, so it's all good fun. Once you have listened to what is being said, you need to decide if that's the company that you want to invest in or not. Do you think the company will grow and make money in the future? Is it possible that anything could go wrong for them? What other companies are doing well in the same kind of business? These are all the questions that you need to consider when you're doing your initial research on a company. The next thing you should look into is how much money the company has and how much debt they owe. Does it all balance out? Do they make enough money? Are they likely to make lots more money in the future? Think of it as spying on a company to give you the confidence that they'll do well in the future. The final part of your research should end with looking at a company's PE ratio. PE stands for price to earnings. This is a ratio to see how much you might earn versus how much that you're spending. This is a bit like odds in betting. How much are you putting in and how much are you getting back? There's future PE that uses projected future earnings to calculate the ratio, and trailing PE, which is the standard form of a PE and is calculated by using recent past earnings. This is a bit like the form guide if you're betting on horses or a sports team. It can be helpful for you, the investor, to consider both calculations of the PE ratio. Always make sure before you start to invest that you take the time to learn the different terms and what to look for. Question 8. 3 biggest things when picking stocks. When picking stocks, there are 3 things that you should consider before investing. The first is having a long-term outlook. Look into the future like a palm reader, but one that's using actual evidence to work with. Always look at what money can be made over time. With the right business, as long as it looks like it's got a bright future, it shouldn't fail. The second thing is to make sure that you fully understand everything to do with the business. Actual like the business and believe in it for the long term. This is super important because if you don't believe in the company you're investing in, then chances are you're investing in the wrong company. The final thing to consider is making sure that you are buying the stock when it is undervalued, or at least a fair amount. The last thing we want to do is get FOMO and buy a stock when it is at an all-time high and it crashes and you lose a lot of money quickly. Try to move your emotions out of the picture before buying a stock. Question 9. Worst case scenario for buying a stock. Okay, now that we've covered that, let's get into the worst case scenario for buying a stock. What's the worst thing that could happen when buying a stock? That a company goes bankrupt and they go out of business, which means they lose everything, including your money. If you're investing in great companies and you did everything you could to find out about the business, the chances of you losing your entire investment are pretty slim. Question 10. The best case scenario for buying a stock. That was easy enough. Now let's talk about your best case scenario for investing in stocks. What's the best thing that could happen when buying a stock? Everything. There is no limit to how much money that you could make when buying a stock. It has the potential to make an infinite amount of money. I'm talking 100%, 200%, and even 1000% gains over time. Question 11. How are you taxed on profits? For this next question, what would a conversation about making money be without discussing taxes? When you get a job and start earning money, you have to pay a thing called tax on your money that you earn. This means that part of the money that you earn gets taken away from you. But the good thing about stocks is that you don't have to pay any taxes until you sell the stock. In the US, you have to pay 15% taxes on a stock that you own for at least 1 year to qualify at the capital gains tax level. If you sell a stock before 365 days, then you will get taxed at your regular income on any profits. So, all the more reason to hang on to your stocks and let your money grow for years and years. Question 12. How much money should I invest in my first year? Well, how much have you got? Now, I know that you're just getting started with investing in stocks, so the question is, how much should you actually invest in your first year? In your first year of buying stocks, it's best to start small, so you can limit your risk whilst you're learning to become a better investor. There's no rush. Take your time. Pretend it's a bit like getting out of bed to go to school or work in the morning. Slow and steady. But it's also a good idea to invest continually in the market, like once or twice a month, through the year. And that way you keep learning and growing your stock portfolio. As you become better and better investor, then you can add more money to your account and buy stocks more often. The more you learn, the better you will get. Practice makes perfect. Question 13. Is it worth investing small amounts of money? The next question is easy, but I wanted to touch on it anyway, because it doesn't matter how much money you start with. The most important thing is just to get started. It doesn't matter how much you want to spend on a stock. Never think small amounts are not worth it. If you start too big, you can't grow. But if you start small and just invest a little more money over time, then you can eventually get to over $100,000 or even $1 million in stocks. Remember, you can get started with just $50. So what are you waiting for? So there you have it, everything you need to get started with investing in the stock market. It's always a bit scary to start something new, especially when it involves your hard-earned money. But if you do your homework about the companies you want to invest in, then the sky's the limit. Don't be scared. You know you can do it, and just think of what it will feel like in 5 to 10 years from now when you've built up a large stock portfolio. When you think of the millions of people out there that have invested money into stocks and now have their dream cars, houses, holidays, and even set themselves up for the best retirement ever, there is no reason why you can't have the same. Start small and aim big. The best way to make money is to invest. Good luck. Hey, if you've enjoyed this video, make sure you subscribe to my channel to see more content like this. In the comments below, let me know what is your biggest fear when it comes to investing in the stock market, and we'll put you at ease. Cheers!